Hello, legacy builders, and welcome back to another episode of the Legacy Pregame Podcast. I am Marcella Mollon-Williams, behavioral financial advisor, mindset coach, and legacy strategist for first generation legacy wealth builders.
And I am Mark Mullen, co host, and I'm an investment advisor, legacy strategist. And together we are your legacy building duo, guiding first gen high income earners like you from financial wealth to generational impact, one intentional move at a time.
All right, Mark, today we are tackling something that is silently sabotaging even the smartest investors. It's something we've seen firsthand, so I'm a little excited to talk about this one
Mm,
today. We're talking about investor bias.
y-
And
This is
yeah,
a big one. This,
this is
this
a big
is,
one, all right?
yes, it is.
Yes, I think we've alluded to it in a previous episode. So I was ready. I was ready for this conversation. So I
No,
hope
we're always ready to have this conversation because it plays such a significant role in our day-to-day lives.
it really does. So we just have to hope that the listeners are ready for some hard truths today.
Well,
But
there are going to be some deniers, but hopefully they can warm up
that's
and
all right.
receive this information because it's all about helping you. That's what this is about.
Yeah. And I was going to say we'll be gentle, but I can't promise that. So
I don't
I
know about that.
can't. I can't. So let's get into it. It's so important because the truth is, it's not always about the math that messes people up. And this is what we're talking about. This is what we see. It's not about the numbers, it's the mindset. And if you don't become aware of the stories in your head, you'll end up repeating patterns and passing those patterns down the line. And that is one thing we do not want. So let's get right into what we're talking about today. And I want to start with just kicking off with a quick stat. So, according to a 2023 Morningstar study, investor behavior, not market performances, let's make sure I understand that investment
Mhm.
behavior, not market performance, costs the average investor nearly 1.7% in lost returns annually over the past decade. That's just the past decade. So that means that many portfolios underperformed, not because of the investment, but because of the investor.
So that's you. Just to be clear
Ex-
here, right? That it is not your performance, it's not your of the market, it's not the advisor. That is you messing your portfolio up, okay, because of these
Reality
biases.
check.
You know? So yes, all right. And so in the Marcella, that's so true what you just brought up there, and we know this firsthand. Just to give a little example here, with a client of ours that's a tech entrepreneur, had a successful business and he sold it and came to us with the notion of going into crypto, and not just going in, Marcella. I mean, going
Yeah.
all in,
Oh, and
because he's seen a friend of his triple his portfolio in 6 months. So, of course, we had to have that conversation because one of the things we're going to do here is we're going to have a conversation. We want to hear where you're coming up with your strategies, your goals. We want to hear it all, but we're also going to ask questions, right? And Marcella,
mhm.
you're a big fan of asking the right question.
That's right.
So we had a conversation in regards to the long-term goals, his risk tolerance, and then just how this aligns with his values and his family values. And after that conversation, let's just say he had to pause. Okay,
Hmm.
we had to pause on this, and Marcella, let's go into the reason to
Yeah.
why he had to pause.
Yeah, I'm glad you mentioned that because we had that conversation, and when we really looked at what was going on, he wasn't just chasing a good investment. That's what he thought he was doing. But
Hmm.
we recognized it as a classic textbook case of overconfidence bias. And if you've never heard of that, don't worry. We will go through that and provide you with more meaning behind it. We're actually going to go
Exactly.
through four investor and investment biases that we see show up again and again and again, especially for first generation high earners.
Yes.
So we're going to break that down. But first, before we start going through these 4 biases that we're going to touch on today, Mark, can you just please give the listeners the definition? What is an investment bias?
Sure. So when we talk about an investor or investment bias, it's a irrational belief. You can include assumptions, reactions, even interpretations that hamper the ability to make evidence-based decisions. And let me say that one more time. It hampers our ability to make evidence
Mm.
based
Mm.
decision, not gut feeling. Okay,
That's
that's
the
not
most
evidence.
important part.
Okay, so
That's the important part.
yes.
That is so good. And let me just add to that, just again, to make sure we have clarity here. I like to look at bias as a predisposition towards certain types of decisions without really looking at the situation as a whole. And by doing that, the results often end in mistakes. And that's the part we
Mhm.
want you to understand. You're conditioned to look at certain situations a particular way, and they kind of land unfavorably. And Mark, you know that I have a bit of a fascination with biases. I mean, you
Appreciate
and I both a
you.
little bit. You like it too. I mean, we
Yeah,
love to
but
talk.
you like it more. I mean, it's on your wallpaper. Right?
Exactly. Okay, yeah. So my screensaver on my computer screens, it's called the Cognitive Bias Codex. So it's a chart just mapping out over 150 biases that we potentially have as humans.
Right.
So
And we're only talking about four.
yeah, we're only gonna
Maybe
cover
four.
4 today. Okay, there are a lot more than that out there, but strain myself. But I'm fascinated with that because there are a number of ways in which our minds can play tricks on us, and which we can self-sabotage, and which we
Mhm.
just need to make sure we have the accountability and the checks and balances that we need. Because the more we're aware of this, the more we can do something about these, phenomenons, that the psychological phenomenons, which is what they are. So we are going, like I said, we're going to cover these 4. So let's go ahead and break them down. I'll get us started, Mark. The first one, as we just mentioned, we're going to start off with overconfidence bias, since
Yes.
that's where we were talking about with the example of the client we just had. So overconfidence is when past successes convince you that your intuition is bulletproof. And that's the key point. Your past success, I can say the word right, past success
Yes.
convinces you that your intuition is bulletproof. So, for
Mhm.
example, you may think, oh, I made a lot of money. I did great on the last real estate flip. So
Oh,
everything I touch is gold.
well, let me add on top of that. I made a lot of money in my first real estate flip. The first one I did, tripled my money and everything. So, like you said, everything you touch is gold. But here's the thing: that's not a strategy, right? Uh, Actually, I'm about to jump ahead of myself. I pause. I paused because here's the thing: we want to make sure that when we're making decisions, when we're talking about biases, a lot of time we're thinking it's a strategy, but oftentimes it's a gamble,
Yeah.
and it's a gamble not just for yourself but for your legacy. And
Mhm.
we do not want to do that. That is not a plan. So when we talk about overconfidence bias, that sucker is sneaky. I mean, it
Mm,
is sneaky because it tells you that due diligence is optional. And let me be very clear here, due diligence is never optional. Not when it comes to creating the foundation that generations is going to build on. I don't want to hear the word optional, no.
absolutely
But
not.
that overconfidence will make you think, oh, I don't need that because I know what I'm doing. But here's the thing, it's about when it comes to long-term wealth, we don't want to be lucky guessers. That's not what we want to do. We want to make informed decisions. We want to make sure that we're very intentional based on facts and our due diligence, right, Marcella?
Absolutely. All
Mhm.
very important parts for overconfidence bias.
All right,
So
but we
let
still
me
got more, right?
Yes, yes. Let me jump to the second one, which is confirmation bias. And we see this a lot as well. This is another big one. With overconfidence bias, you only listen to what confirms your point of view. And This is huge. I mean, this isn't just money. This is a
This
lot of other things.
Marcel,
More.
we're going to stick with money here, but
Okay, we're gonna stick.
we can definitely say it applies to almost every area in our life. I
It
mean, no question about it.
absolutely does. So if you believe, in this case, sticking with money, if you believe that the stock markets are about to crash, then you'll only follow articles or influencers that support that. You'll ignore data to the contrary. Any other data you will avoid. So,
And
yeah, go
Mark,
ahead, Mark.
you know, I get excited about this because,
Yes.
again, as we said earlier, it applies to so many areas in our life. But when it comes to what we do, Marcella, and why we do what we do, when it comes to building a legacy, right? Confirmation bias can actually reinforce generational fears. So it's
Mm,
actually going to work counterintuitive to the legacy you're trying to build. So it can create, to give you some examples, when we talk about fear, legacy fears, then we can, how many of you have heard this before? Oh, you know, wealth ruins families or money changes people, right? These are the fears that you could pass on knowingly or unnecessarily or intentionally passed
mhm.
on to the generations. And Marcella,
And Mark,
we're not about that, right?
not at all.
No,
I have to come in with that
I
one
know you
because
do. That's why I'm giving you your time. Yes.
yes, we have to challenge those narratives there. And in past episodes of talking about, pausing, and we're going to get more into this in this episode. But let's look at what Mark, the two examples, Mark, that you just brought up.
Yes.
Let's look at that. You talking about wealth ruins families, right? And you can look at that and stay stuck in that place
Yes.
and not build generational wealth. Or you can reshape that mindset and say, no, it's the lack of legacy planning that ruins families. And
Yes.
then we hear that when money changes people, people fear money because they feel people are going to change around it. But then I'm sure we've all heard, or many of us have heard, that money doesn't change people, but money reveals who people already are.
Yeah,
And
exactly.
that's the type of shifting that needs to be done around biases.
Yes.
So let me jump to the third one, Mark, which is illusion of control. This is when we believe we have more control over outcomes than we actually do. Like investors saying, if I watch the market every day, I can predict the dips. And we have
Mhm.
people that do that. They just sit and watch the markets.
Yeah, or worse, you know, they're trying to time the market. And but here's the thing, when it comes to the illusion of control, that convinces you that actions equates to intelligence. And let me tell you, that is not the case. Just because you take action, it gives you that false sense of control. Doesn't mean it's the right choice. You
Oh,
can literally be working counterintuitive to what you are trying to achieve, your financial goals. So these
yeah.
biases are so important to understand because we're all, let me not say many, every one of us are dealing with this. And if you're not aware of it, then it's governing your finances. In this case here, again, we're going to just stay with finances. It's governing how you are making financial decisions, and you're doing it blindly. So we got to make sure that we are aware of that. So Marcel, let's go into the fourth one.
Yeah. So the fourth bias that we're covering today is excessive optimism. And I hope
Mhm.
y'all are writing these down. Excessive optimism. This is when you think the good times will last forever. They're never going to end. So it sounds like this: real estate never goes down, or tech stocks always beat the market. You hear that? It's the hyperbolic language: never, always.
Yes.
Excessive optimism ignores historical patterns. And that's a very key point. And it can make you take on risk your legacy cannot afford. Let me say that again. Excessive optimism can make you take on risk that your legacy cannot afford.
Thank you for repeating that because it's so important. All of these biases are so important. And I have to admit, I do have my favorite ones. This one is hard for me to relate to just because I see it all the time. This expectation that it's never going to end. It's always going to go up. You know,
Yeah.
crypto, you know, it's
Uh-huh.
one of my favorite ones. And Marcella, I can't understand that. I can't understand, again, because of the bias, you would ignore patterns, ignore history, ignore the science, right? And we have
Mhm.
to do better. So how do we fight against these biases? And this is where we teach and take our flex family, our clients, through the 4 R's of alignment. And
Oh,
so,
yes.
Marcella, why don't we dive in here into the 4 R's so we can help people fight or combat against these biases? And again, this is very surface level because, as Marcella mentioned, there's over 150. But if we can get you moving in the right direction with these four, you know,
Mhm.
at
That's
least
right.
today, at this point that, hey, I'm making the right moves. But it
Yeah.
doesn't stop with just the four. Okay, we're just giving you an appetizer here, opening up the door for you to understand these things exist, and we're going to give you some fuel to how to combat that. So let's go through the four
Mm.
R's here.
Let's do that. So we're going to start with recognize. The first R is recognize. So when you start with recognize, you notice your emotional and mental state. You want to recognize what is going on with you, what you're feeling, physically as well, physically, mentally, emotionally. What's going on? Are you making this decision out of fear? Are you making a decision out of pride or pressure? Recognize what's happening with that. And then the second
Yes,
one
yeah,
is reflect. So we want to you pause to recognize. And okay, Mark, as I mentioned in a previous episode, we talked about the 3 Ps. And so we're
yes,
taking it, this is amplifying the 3P process, and that we talked about in a previous episode. It was episode 8. So go back and listen to that one.
yes.
And bringing the 4 R's of alignment works with that. So you pause to recognize what's happening with you. Once you do that, you now need to reflect on the situation. Ask yourself, is this aligned? Is this decision, is this action I'm about to take aligned with my values, my goals, and my legacy? So, a very important point there. So, you're reflecting, pausing to reflect. Once you go through that process, you now move on to step 3 and you reframe, which is reframing. You want to step back and consider an alternate perspective. What is another way of looking at this? Am I seeing the big picture? Is
Mhm,
my view too narrow? So here is where the
mhm,
shift is happening here. We're always talking about shifting your mindset. So here I'm actually showing you scientifically you are shifting your mindset through reframing. And when you get to after you've done reframe and you start seeing the various perspectives, you now move on to the fourth R, which is response. Now you can respond. You can choose a measured, intentional next step that reflects who you want to be,
mhm,
not just how you feel in the moment. And that's so
mhm.
important.
Yeah, so what we're talking about here is, and for the fourth one, is understanding that your response is going to be based off of due diligence. It's going to be based off of evidence. It's going to be based off of facts. Let's remove the emotions. Let's remove the feelings. And when we're talking about finances, not just finances, but specifically finances, we need to remove emotions out of the equation and use facts, statistics. Let's use evidence. And that's very important, which brings us home now to for everyone here to understand that in order to do this, how do we go about doing this, right? So let's look at the legacy pregame framework. Now, the legacy pregame framework, you have access to that inside your Marcella. It's in their clarity workbook, right?
Clarity workbook. That's right.
Exactly. Okay. And so in there, and to access that, you can find that at your legacy pregamepodcast.com. So if you log on there, you would get access to that. So let's talk about the legacy pregame framework. Now, of course, legacy is a acronym. And so biases show up everywhere inside that can work against your framework. So for example, let's go through the L here. So we're going to go through the acronym. So L is your legacy lens. So when we talked about the legacy lens, biases can distort what you could believe is even possible for your family. So
Yeah.
that long term vision you have, the biases can completely distort that. So now the
Yes.
possible can become impossible for you because you can't see it, you can't
Yeah.
visualize it, right, Marcella?
Yeah, no,
Yeah,
and so let's go through this together. So
yeah.
legacy, yeah. So then we go to E, which is the next letter in the framework, and that's for emotional mastery. And your biases can come in and hijack your decisions, take control of your
Mm,
emotions and hijack those decisions. And then when it comes to G, the generational goals, it convinces you to settle or delay your goals,
wow.
which is just heartbreaking when I say it, my
Right,
first
I
feeling is
know, right?
heartbreak, right?
Yes.
No, I don't want that for anyone. Then in the alignment audit, biases keep you busy, not purposeful. Ooh, those things can distract you, get you out of alignment. That's what our biases can do there. And Mark, bring it home.
Sure. So now we have the C in legacy, which is capital strategy, where the biases can drive reactions, not planning. And then lastly, we have the Y, which is your next move. This is a big one here. They're all big. Okay. So
Yeah,
one's
they
not
are.
greater than the other one here. But this one here, this bias is so important because it can paralyze you or
Mhm.
push you to move too quickly. And we've seen this time and time again where you have these paralysis, this inefficiency to move, or you're moving too quickly. So again, we want to make sure that you understand the importance of being aware. Marcella, one of the things that as we're talking about this, it's so important for individuals and families to be open to who they are, to expose themselves to their shortcomings. Because
Yeah.
let's face it, there are a lot of people out there that don't want to admit their shortcomings. And if you don't do that, you're never going to be able to get past these biases. You're never going to be able to really create a foundation you need for your legacy. So you have to be open to allow yourself to grow, to allow yourself to expand, to allow yourself to discover what's hindering you from your potential.
Oh, yes, all of that. And Mark, we've covered so much today. I
Yeah,
think we've given them a lot to chew on, which is why I want to take our listeners through a pregame practice for this week and really break it down so they can take all that we talked about with the biases and the 4 R's and see how it actually works in real life for them. Right? Does that make sense?
yep, that makes a lot of sense. Yeah,
All right, so let's do this. I want you to pull out your journals, your legacy pregame journals. I feel like it's been some time since we asked you to pull that out and
I
grab
was
your
thinking the
pen.
same thing too.
Look
Yeah,
at that.
it's been a
Yeah,
while.
let's do that. Let's do this pregame practice together. So, first thing I want you to do is going to be 3 steps. The first one is I want you to identify one financial decision you've made recently that didn't go the way you had hoped. So, no matter how big, how small, just one
Mhm.
financial that did not go the way you had hoped. So, that's the first step. Once you identify that, the second is I want you to walk through the 4 R's. I want you to walk yourself through recognition, reflection, reframing, and response. All right. And just go back and listen through the episode again so you can hear what we shared and really take the time to go through that process. And then,
Mhm.
third, rate your emotional mastery on a scale of 1 to 5 using the Clarity Workbook. So it's in there, as Mark mentioned. You can download the complimentary workbook at legacypregamepodcast.com. So, and I want you to go through that process and rate your emotional mastery there.
Excellent, excellent. Thank you, Marcel, for that. Because
Mhm.
here's the thing, as we're working with you, we want to make sure that we're not asking you. Well, let me be clear here. We're not asking you to eliminate emotions. We're not asking you to be a robot. What we want you to do is to lead with wisdom, not worries. Because when it comes to your wealth, we want to make sure that it's a blessing, not a burden to your generations, not a burden to your family. So this is why we have this process. This is why we have these steps here that we encourage you to take it seriously, do the assignment so that you have an understanding of who you are. You have an understanding of how you can level up so that your generations can benefit from this.
Absolutely. And I love that. It'd be a blessing, not a burden.
Yes.
And and if today's episode has been a blessing for you and eye-opening in some way, share it with someone who's walking the same path with you. And if you
Mhm.
haven't already, again, Download your free Legacy Clarity workbook at legacypregamepodcast.com and also share that with someone else who's walking this path with you.
Yeah, and don't forget to subscribe so that you never miss a moment of mindset, money, and movement.
Yes, that's what we're all about. We're going to keep this thing moving. Keep
Exactly.
sticking with mindset, money, mission, and movement. So until next time, live well, build wisely,
And prepare with purpose.